USD, US dollar. The Federal Reserve, Fed, enters 2026 with a predominantly dovish stance, despite a split committee. Following 3 consecutive rate cuts in late 2025, the Fed funds target range was lowered to 3.50% to 3.75%. Market pricing, bolstered by institutional forecasts, points toward 2 additional 25 basis point BPS cuts in January and April, bringing the terminal rate to 3.0% to 3.25%. The Fed's cautious tone reflects concerns over inflation persistence above the target and a softening labor market, with unemployment projected to reach 4.7% in Q2 2026. PCE inflation, the Fed's preferred gauge, stands at 2.8% and is expected to converge toward 2.5% by year-end 2026. The high tariff environment, with an effective import tariff rate of 18%, continues to exert pressure on prices and international trade. High-impact news for the week includes expectations regarding the upcoming FOMC meetings, Jan 28 and APR 29, non-farm payrolls, NFP data, Jan 9, and CPI prints, Jan 13. The market is also monitoring fiscal developments, trade negotiations with China and Europe, and the downstream effects of tariffs on consumer and industrial goods. Summary: the USD maintains a short-term bearish bias as the Fed prioritizes combating economic deceleration and labor market fragility, despite sticky inflation. Volatility is expected to rise as the easing cycle nears its end, and the market seeks clarity on the pace of monetary policy normalization. JPY, Japanese yen. The Bank of Japan, BOJ, adopted a mildly hawkish tone by hiking the policy rate to 0.75% in December 2025, its highest level in 30 years. This decision was driven by a moderate economic recovery, a tight labor market, and robust wage growth. Japan's core CPI reached 2.1% YOY in January 2026, exceeding expectations and reinforcing the BOJ's confidence in the wage price spiral sustainability. The BOJ has signaled that further policy adjustments may occur if economic activity and inflation align with projections, particularly if core CPI stabilizes at the 2% price stability target. The external environment, marked by reduced uncertainty regarding the U.S. economy and global trade policies, supports a more restrictive stance, although real interest rates remain negative. High-impact news includes the CPI overshoot, 2.1% YOY, which could strengthen the JPY and increase the probability of further hikes. Markets are also tracking spring wage negotiations, shunto, and the impact of global tariffs on Japanese manufacturing. Summary: the JPY presents a bullish bias, supported by above-target inflation and the potential for additional monetary tightening. The BOJ remains vigilant regarding external risks while maintaining the flexibility to respond to shifts in the economic landscape. CAD, Canadian dollar. The Bank of Canada, BOC, maintains a dovish stance, with the overnight rate held at 2.25% since December 2025. This reflects an assessment that policy is currently at an appropriate level to anchor inflation near the 2% target, while the economy undergoes structural adjustments due to tariffs and trade uncertainty. Canadian GDP surprised with 2.6% growth in Q3 2025, fueled by trade volatility, though domestic demand remains flat. The labor market shows signs of improvement, with unemployment at 6.5% in November. But trade-sensitive sectors continue to face headwinds. Inflation has decelerated to 2.2%, with core measures ranging between 2.5% and 3%. In commodities, Brent crude is trading between $61.64 BBL, significantly below the $71 reported previously. A projected global oversupply of 4 million barrels per day for 2026 is weighing on prices, negatively impacting Canada's trade balance and energy sector revenues. The oil futures curve suggests a bearish outlook, which may limit CAD appreciation. Summary: the CAD holds a neutral bias. The BOC is adopting a wait-and-see approach amid stabilizing domestic indicators and a challenging external environment. Crude oil, Canada's primary export, remains a key downside risk. AUD, Australian dollar. The Reserve Bank of Australia, RBA, maintains a dovish stance with a hawkish tilt, holding the cash rate at 3.6% for the last 3 meetings. The central bank warned of upside risks to inflation driven by resilient domestic demand and a still tight labor market. In the commodities space, copper shows a bullish market structure on the H4 chart, trading at $5.68 lb, supported by supply constraints and long-term demand from decarbonization and urbanization. China's industrial production grew 4.8% YoY in November 2025, while iron ore prices closed higher, 106 on hopes of proactive Chinese fiscal stimulus and a ramp-up in steel mill activity. Summary: the AUD carries a bullish bias, supported by strong metals fundamentals and expectations of Chinese fiscal support. The RBA remains alert to inflationary pressures and may pivot to a more hawkish stance if data continues to outperform. GBP, British Pound. The Bank of England, BOE, turned dovish by cutting the bank rate to 3.75% in December 2025. However, the committee remains cautious and split, signaling that further cuts are not guaranteed. CPI inflation cooled to 3.2% in December, while unemployment rose to 5.1%. UK industrial data remains weak. Manufacturing output fell 0.8% YoY, and business investment intentions remain subdued. Consumer confidence is below historical averages, reflecting caution regarding the fiscal outlook and economic uncertainty. Summary: the GBP holds a neutral bias. The BOE is prioritizing caution in the face of economic stagnation and above-target inflation. Markets are closely monitoring industrial production and employment data for signs of further deterioration. EUR, Euro. The European Central Bank, ECB, maintains a dovish, accommodative stance, with HICP inflation projected at 2.1% YoY for December 2025, core HICP at 2.4%. Eurozone GDP is forecast to grow 1.2% in 2026, with a gradual recovery expected as financial conditions ease and external demand picks up. Industrial data from Europe and Germany show signs of stabilization but modest growth. Eurozone industrial production grew 2% YoY in November 2025, though the trend remains mixed due to supply chain bottlenecks and weak external demand. Summary: the EUR presents a neutral bias. While industrial fundamentals are stabilizing, there are no clear signals of a robust acceleration. The ECB remains focused on the risks of global supply chain fragmentation and tariff impacts on exports. CHF, Swiss franc. The Swiss National Bank, SNB, remains dovish, holding its policy rate at 0% following the December 2025 meeting. Inflation dropped to 0% in November, falling below the target range. The SNB has signaled that policy is already sufficiently expansionary, and the bar for further cuts remains high. In commodities, gold maintains a bullish market structure on the H4 chart, trading above 4,350 Us due to geopolitical uncertainty. While gold strength often drives safe haven flows into the CHF, persistent deflationary pressure may eventually force the SNB to intervene or reconsider its stance. Summary: the CHF carries a bearish bias due to persistent deflation and the risk of future SNB action. While gold prices support the franc's safe haven status, the interest rate differential with the Eurozone limits its upside potential. NZD, New Zealand dollar. The Reserve Bank of New Zealand, RBNZ, adopted a dovish stance with a hawkish tilt after cutting the official cash rate, OCR, to 2.25% in November 2025, signaling that the easing cycle is nearing its conclusion. Inflation stands at 3%, with a projected path toward 2.1% by Q3 2026. The labor market is stabilizing and domestic consumption is improving. The RBNZ indicated that further cuts would only be considered if the economy decelerates beyond current projections. The currency reacted positively to the signal of policy stability. Summary: the NZD presents a neutral bias with solid fundamentals and a stable monetary policy outlook. The RBNZ remains attentive to downside risks, but the base case remains one of moderate growth and inflation convergence. Click in like and subscribe in my channel to get information about Forex news.